Okay, this is also another supplement. The first one I did before this was on relative volume, but this one's going to cover climaxing versus breakout volume. So it's very important because I'm not going to come back to this study, so better just finish it. So over here you had climaxing volume. The difference between climaxing and breakout volume is that breakout volume is breaking something. It's breaking support or it's breaking resistance of a trading range. Breakout volume that breaks support or resistance is an indication of absorption and an indication of continuation. It is more likely that price will continue. Whereas climaxing volume is not going to occur at a support or resistance level. It is going to occur at the top of a wave or the bottom of a wave. It is not trying to break a level. It has already broken a level, and it is at the top or bottom of the wave, and it is ending action. It can end a trend and it can end a swing. So given these two principles or definitions, let's go through this chart and see where the breakout volume is and where the climaxing ending action is. Here you obviously have a climax. Why? High volume, big spread, lack of follow through, meaning an immediate reversal. So what is this? This climaxing ending action. Alright? Ends that move. Second, up here, another climax, sudden increase in volume bigger than 1, 2, 3, 4, 5, 6, 7 days. That is a buying climax, and that has terminated the swing. Then on the pullback, you have a minor climax which increased 1, 2, 3, 4, greater volume than 4, going back to the area of the breakout, widespread, greater volume. That is a climax that has terminated the pullback. Then you have a rally into resistance, where on the top of the swing you have an expanding bar with big volume, big range. Climax has no follow through, which helps the case of the climax. And what happened was you had a pullback into absorption, because this was at a resistance level anyway. So bang. So that's another example of a climax. Then I think this was also climax. Forgot, but I think he mentioned this as climax. But before we go to the climax, let's take a look at the breakout, which occurred right here. Breakout coming from below support and breaks out above support right here. Breakout volume. Absorption is done, breaks through that level of resistance. That's breakout, that's continuation. Heavy volume. Alright, on the top we have green, 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 green. Climax volume. Why? It's not breaking a level. It's not below a level and then breaking above it. It's already at the top. The level has been broken and it's continuing at the top of the rally. That's climaxing volume. What helps the case? Big range, big volume, lack of follow through. So you have the differences between climax volume and breakout volume. Where else do you get this? I think he mentioned it right here, right there. Minor buying climax. He called this a minor, I think, minor buying climax. But again, a sudden rise in volume. This is during a pullback. It's not as clean or clear, but it's bigger volume than 1, 2, 3, 4, 5, 6, 7 sessions. 7, possibly 8, and 9 and 10 sessions. And what happened? No follow through, or actually 2 days. It took 2 days, but no follow through. or the net, what he said was the net progress between those 2 days wasn't there, erased. So he called this, but I think that today, because the range isn't that much, the range is not that much, people, instead of calling like climactic volume, they may call this effort reward on this bar. Because the bar is smaller, the close is lack of progress, yet the volume is very high, so they might call it effort reward. Whatever, it doesn't matter. It's the same concept of ending. After that, we have a break right here. Is this breaking? Yes, it is. Where's the support level? Right here. Does it break through? Yes, it does. Coming from that support level and breaking through on increasing volume. Bigger than 1, 2, 3, 4, 5 days, 6 days. Breaking it. What is that? Breakout volume. Breakout volume is usually indication of continuation. Given the background and all of that, indication of continuation. So that is, this quick video is going over breakout volume versus climactic volume. One is ending the move, the other is continuing the move. One can end the move, and if you, by definition, if you end a move, you start another move. So ending and starting and continuing. So this is why the concept of climax is very, very important. Okay, and it needs to be understood by all Wyckoff traders. The problem is that most traders will look for a buying climax up here and get into arguments looking for, climax, secondary test, automatic rally, and have that sequence in their head, but need to kind of get away from that and understand that climax can end trends, it can end swings, it can also there's also other things, like you have to be kind of flexible in because the climax, it in terms of a swing, doesn't have to be the last bar. It can be like the bar 1 or 2 before it, that has heavy volume and then terminates 2 bars later. So that's also needs to be kept in mind. But in general, you get the idea. Like, those points have to be marked and understood. Anyway, I'm done. Bye.